Yeah, so my favorite tax loophole that is absolutely legal is, and I forget the name of it specifically, but it's essentially the real estate investor loophole. And what this does is if you can find enough investors so that you can go out and buy a piece of real estate and you get a piece of the action. In other words, you've got a partnership, you've got 10 partners, 9 of them put in almost all the money. You didn't put in much money. You're just sort of the guy who's working the whole deal. But you have, let's say you get 20% of the partnership. Now, normally, you can't take a loss on that unless you have put money in. So you've got to have skin in the game. It's what the IRS calls basis. So if you don't have basis, you can't take a loss against that, against your normal income. Now, real estate is completely different. Real estate allows you to go below your basis and take that loss. So 9 people put in all the money. You're just doing sweat equity, but you have 20%. You'll get 20% of that loss, and you get to use that 20%. Only in real estate, though.